Okay, let's look at this now as to how we might combine a candlestick chart here and some of the tools that you're probably used to using, particularly those of you that are not yet using a footprint chart, and we'll look at how we can work with the two together. Now, while we do offer some stacked imbalances within some of the tools that we have over here, you're going to have more control in the footprint chart. So I have a little bit more flexibility in terms of what I identify as an imbalance here. So we will get fairly close to that here with some of the tools that we're putting on this candlestick chart to replicate what you're seeing here. And one of the most obvious right off the bat is that I've got a cumulative delta down here. So you'll note here, and I'm just highlighting this last bar here, this 123 bar as we went up into this push. Here's the first test of the IB low. There it is. So as you're down here, we'll note we get outside of the Bollinger Bands, then it's a straight shot up on delta, right? Look at the buying here, right? So you can see it being reflected here. The same thing that's being reflected here so here's the delta, here's the cum delta. Here I can see that delta going up here as we go into that pivot. It's the same thing here. I get that's reflected directly below. So here it's just as candles, here it's as a table. It's just part of your preference here. So as the market is going up here, let's open this up and then look at how we might interpret this with the two. So having identified that location. Oh, what do I have here? So I have, I think I've got a few things hidden here. So I've got our order flow zigzag on. That's literally the zigzags that you're seeing. I've got our initial balance, of course, toolbar, cumulative delta. I also have our pivots indicator on here. I like the Jackson pivots here. So if you can see, so here are my pivot ranges here. So here's the S1 and R1 and then 2 and 3 here. Now these are fib relationships relative to where the price is relative to the pivot. So you'll note here as we come down into this low, we're hitting the first we're hitting S1, S2 on the Jackson pivots. So we're bouncing into this. So it's potential, right? It's potential support. You see that dotted little line here. I know that's a pivot from, we're going back to the prior day's low. That's actually part of the auto fibs, right? Very, very useful. So I can see this pivot coming into play down here as the market comes down to tap it. All right, let's open this up a little bit and let's get back to it. It's very easy for me to get distracted. Okay, so we're here and we're going, okay, well here's the first test of the IB high. Here's the first test of the IB low. Now you look over here, remember it's not 10:30 yet. I keep this on New York time, so here it's exactly 10:30. Here it's 12:30, but this is the first time it's established here. It's not tested till here. First test the IB high. Actually, look what we do here. I mean, this is not uncommon. We go from IB high to IB low. Back to the mid. Now, what are we doing? Well, I guess going back down to the low. If you get nothing else from this video, aside from everything else we're talking about here, if you just pay attention to the first test of the IB high and low, I think you'll be happy you did. Okay, so back to the subject matter. Okay, so I can see, all right, so I'm trying to get some insight here, just like I do with a footprint chart. Where's the aggression? Right now, we're using a proxy for delta here. We're using the speed of the volume. So again, we have videos on all of this. So this is all detailed. This is the order flow zigzag. Anything within the graphical order flow, you can take a look at those videos here. If you need more, but let us know here and I'll do something specific to this. But you can see the speed of again, it's aggressive buying here, thus 3, right? If you see 2 candles or two arrows, that's 2 standard deviations. 3 is 3 standard deviations. That's speed of the volume, right? So it's a proxy for delta, but we're not only getting the speed of the volume, right? How fast is it coming in? But we're also getting the delta below. Now, so as you look at this and you see this, oh, okay, well, here's that test, right? We're in the Jackson zone. We've tested the IB low. Here's the kickback. We've come right back to the mid. So you're going to be looking here saying, well, what's the first thing you'd think, right? For anyone who's seen more than one of my videos or any of the teaching I do. Okay, this is David Halsey's discovery, right? That this is done via fib relationships. All right, so as we swing down here and retrace, what do we do? Right, this is right where the algorithm is active. We get between the golden zone and the 50. Here's that target range. Right, this is the range we're looking for, where we're anticipating an algorithm is likely to be active. Well, now you can kind of see here if we just draw this across. I mean, this seems to be an area that's been pretty pretty active for the market, right? Resistance gets through, support, oh, gets back through. Here we're going to kind of waffle around. Here's resistance. Now what are we doing here? It's just a visual look at the day. That's why I like a 4500 when it slows down, and then I want either a time or a tick size that lets me see the entire day without having to squish it up. So, but I want to be able to see the entire day, so I don't lose reference. That's one of the trade-offs with a footprint chart, is that I can't quite see the whole day. I have to squish them up to where I don't get as much meaning, which is why they complement each other so well. Okay, so if I'm over here looking at that pivot, if the market's right here and I'm wondering, oh, what am I doing here? Right, then it's not as important to me that I see what's come before, because what I'm really focused on is what's happening right in here. What's happening right here, which is essentially right here. So I don't need necessarily, because I have it over here. That's the benefit of having well, either multiple tabs, as in this case, or you could do this on one. You could do it on a laptop, right? It's just, what are your options? Okay, so let's come back here and look at how we could use a few other tools here to help us. All right, so if you have the two, great. Otherwise, okay, well, what else could we use? Well, the first thing, of course, the very first thing we're going to do is check it for that algo participation, right? We already talked about that. The other thing here, and this is one of the newer indicators here, that this is just, I'd encourage you, I know, right? If money were no object, right? But this is the anchored VWAP, right? And this is very common, right? I'll work them from the highs and the lows. So here's my IB high. Well, whoa, yeah, I want to pay attention to that. The anchored VWAP. Now, just to show you this, geez, here I am digressing again. I would have just as much had it running from the low. But once I get below here, and you see the color change, when we get below, this is less relevant to me. Now I don't need that, right? Because I've got it from the high. Right, so I can see, well, again, you know, not too bad, right? Look at where we don't quite get there here. Oh, but if I put measured moves on here, you would see, I think these are all measured moves. I can't remember if I have it on here. I don't. Okay, we'll look at it something that'll have them on. You'll see most of these are all measured moves, right? That's either 50 or a golden zone. And then again, look below. The cum delta is going to almost, not exactly, but almost going to mirror the price action. That's why I like the Bollinger Bands on it. So when I get up here outside of 2 standard deviations at the first test of the IB high, that's one more confluence point to tell you, oh yes, that is a trade. I do want to take this. Once we start back down, cross the center line, oh, game on. Same thing down here. Look, I get outside of 2 standard deviations from that's a 14 period on the cum delta, right? So that get over that center line. What do I do when I get up here, right? So actually I get a little divergence here. I don't get quite as high, right? But this would be, oh, heads up. Now look, also when we get, well, zoom in there. When I get here, look at this bar, right? So I get a doji. Essentially I get a doji here, but three little triangles there. So 3 times the speed of the average volume over the last, well, that's in the first 15 seconds. So I've got very aggressive selling driving it down. Right, and I don't get an up candle until then. Right, and you can see the wick rejection. Right, so it's the same thing. You would, oh, if I come over here, you can see as we head down. Oh, where's a good one here? This one right here. Right, so this bar right here is this bar right here. So it has a positive delta, but look at how it's absorbed. Right, they're trying to push it up. Right, so we get a 139, we get a 13 and a 139, but look where we came from. Right, we had a 1,000 to a 2,000 to, oh, okay, a little less one side have an advantage over the other. Oh, we're gonna try. Oh, down we go. Right, if you look at it over here, right, it's just all down candles. Look at the cum delta, right? These two little these. If we look at the footprint chart, the 2 positive deltas here. Look, right here on the cum delta. That was that effort to try and get up. You've actually got green candles here as a result of the positive delta. Oh, down, right? That center line, incredibly useful information. Once we break that, straight down. Let me bring this up. Okay, right. So last piece, I think, otherwise this video is going to be way too long. They're always too long, as I am often reminded. But I don't know how else to do it. I don't know how to teach it without just kind of talking as I go here. I don't work with a script, so that's just how it gets done. Okay, so with that aside, now let's talk about how we might add a few other components to this, and I'm going to do it on both sides. So right now, this is oh, this would be a perfectly adequate way to approach the market. Here you've got enough information, but what's missing here is that I wouldn't mind seeing some of the additional benefit that comes from putting on a market structure indicator, because it's going to give me additional insight into where those strength and weakness is found in the market. Let me show you what I mean. So I've got this turned off, so let's just turn it back on. All right, now all of a sudden a whole lot comes up on the chart, right? Now I understand that, and it can be like, whoa, wait a minute, what just happened here, right? This just got very convoluted? Well, at first glance, I could see how you might think that. As you work with these tools, these will just become very obvious to you what they are, and it shouldn't be confusing to you, like, oh God, what is all this up here? So there's one idea, of course, would be to be consistent about your color coding. So I do mine very deliberately, so I know when I see something like this, I know that's an order block. I know what I'm looking at. I know this is a demand zone. I know that here's an order block. I know that this is, well, that's my pivot. This is a fair value gap. I always do my fair value gaps in gray. I want to see a fair value gap. Ideally, I don't get one here, but I get one here. Out of an order block, I want to see a fair value gap. That's the tells me, right? Bears are serious here. So you note here we get a change of character as we break that low, right? We do it after with an imbalance here. So this is the reason that's significant is because what are we always trying to decipher, right? If it starts to retrace, do we want to sell it anticipating that, right? That's the name of the game, right? That's the, God, get off of there. That thing sticks to your mouth. It's hard to get off. All right, there we go. Okay, so this is what you're wondering. Right, you're saying, oh, okay, well, it's been down all day. Well, if I retrace right here, maybe I'll get that. Right, that's what you're. Oh, here, screw that thing. Oh, it's a pain. Okay, so swing, retrace. Okay, this is what I want to know. If it's going to retrace here, this is not a bad example. If I can get that hot, sometimes it won't cooperate. No, it's not going to cooperate. Okay, so if I come back to this level here, well, I've got this imbalance here. So I know that money was committed and that traders were aggressive here. So if I'm going to retrace back to this, hey, I want to know that I could, well, of course you can see it, but it doesn't hurt to have an indicator point it out to you like, oh, from this low to this high, I've got a gap in here. So this is an imbalance. I want to know that that's there, and it's helpful to me to know that, hey, coming from that pivot where I had algo participation, 2, I had the anchored VWAP from the high was right there. Boy, when I came out of there, if I'm going to come back to that, well, I mean, always, let's see, let's redraw it here. Always your concern is, oh, okay, well, we could just blow right through it, and now we're going to do this. Right, what you're trying to decipher is if I come back to it here, is there enough evidence here? Is this a trade that I want to take for the potential short for this trend to continue? Right. Well, I would be able to identify? Okay, this is a higher low. Oh, that produces a lower high. Right. So from this low, I get a higher high. That's a higher low. Oh, but lower high, lower high, lower low. Right, all of a sudden, right now, this is the push, right? This is where you have a potential change of trend. We do get a change of character. We do not get a break of structure. So we would not have the ingredients for a major trend change. In fact, that's not what we get, right? We get one change of character followed by the next. So what about the next retrace? Well, welcome to trading, right? That's the trick of it. So if you were looking at, let's see if I can do it here. Let's see, I think I've got one right here as well. Oh, that one broke, so let's go back one pivot. We'll get one right here. Okay, and that one gets target. Right, that's what the algorithm will do. If one breaks, it'll go back a pivot. Right, so there we are. So swing, retrace. Now, when we get right here, let's go over to our candlestick, or pardon me, our footprint, and I'm going to go back to that's about 1203. So let's go back to 1203. All right, so it's right in here, right? So this this action right here, this is the push up. This is what creates this candle right here is this candle right here. So as we come up, this is the push up, this is the push down that leaves behind the order block because of the size of the bar that came out of that. So I have this order block sitting right here. Now I don't get a fair value gap here, right? So it takes a minute to accelerate, and then ultimately I get some imbalances as we push all the way down to the IB low. But I'm looking right here, and I can see as we get up here, oh, wait a second, man, I got 1337 in positive delta. You can look below, 1337. Wait a minute, in the next candle, I go 1509 negative delta? Oh, wait, oh, maybe they're going to run it up, right? So there's this candle right here. Oh, maybe we're going back up. Maybe I'm wrong, right? My stop's on the other side of the 65. Whoa, 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 whoa. Oh, no, feeling better, right? Feeling better with this candle. Look at the cum delta, right? Cum delta. Right, cum delta. Going straight. This is easier to just visualize. We're all used to looking at candlesticks or open, high, low, close, whatever you prefer. But I can see it. Whoa, whoa, boom, boom, boom. What happens down here, right? Again, outside of 2 standard deviations, look at the kickback. That produces the kickback that gives me a higher high. Whoa, does that mean, so at that point, it would have been, here, let's stay with this thinking, right? This is just the reality of trading. At this point, here's what you're thinking. Oh, hey, I got a higher high. Does that mean on the next retrace I can anticipate that? Well, what's down here? There might have been enough evidence here for you to be considering that. Oh, hey, whoa, I'm coming back. Oh, I've got yesterday's low right here. Oh, that would be, you'd be at likely a 50 there. Maybe even a golden zone, right? You're looking for that. Okay, well, how do you know who's going to get that? Right? Oh, I got a higher high. Retrace. Oh, could that be the start of it? Right? That's what you'd be thinking. Well, even if you were initially, here, look in there. Let's go ahead and take this off. If you were looking in here, if you thought, oh, there it is, right? You can see it in the wick. So if you're right down here, oh, those are not candles that really are conducive to thinking, oh, the algo's firing and off we go. It's not supported, but okay, we're holding at the center line. 3 little dojis barely trying to hang on, and then it collapses. So break. So the next question is the next one. Do I want this one? Well, at least if I'm retracing here, I can see that I had aggression here. I had imbalance between those 2 bars. So reasonable, could be unfilled orders here. There could be sellers here that got this that are going to defend here. I know I've got an order block here. So this is a higher probability sell to me than this was as a buy. Even though I had little signs here, we had this big, well, this is the big candle here. Right before it here, I've got some wick rejection here. It might say, oh, looks okay, we're coming in there. So I might have, it's not a fair value gap, but if you were looking at that and you say, hey, that might be an area where I'd look for a little reaction. And yeah, you did get a little reaction, but it was overcome quickly by sellers, and then we break. So the next kick up, what are we going to get? This one, I would look like a better sell, and hopefully you understand why. So now let's go back over to the footprint, and let's start introducing some of these elements over to the footprint. I'm trying to go fast here, but no way around making this a long one. Okay, so all I'm going to do now is I'm going to add, right, because people don't think to do this here, they just think they have to be separated. I'm going to add the market structure to my footprint chart. Right, so hang on a second, I'll be right back. I'll do that. So same chart, I've just added the market structure to it. Right, you see this section we've been focused on, and let's go back to the early part of the day, see if we can draw any benefit from this. Oh, we'll go back. Here's our first test of the IB high. So I have it on here, and now I'm just going to turn it on. Right, so now it's on. Okay, so now we get. So here, let's go. Get a little more insight here. Where's the open? Let's go back to the open. Here's our open. Okay, so here's 9:30 right here. Okay, out of the chute. So what else do I have on here? I should note here. So I've got a 21 period McGinley, I've got a volume profile, and then I've got the market structure indicator. So right now, market structure is, here, let's get this. Let's recalculate here. So just to go over this, and for those of you that So again, we've done a lot of training on this. So some of this, if you're not familiar with this, I'm going to have to refer you to within our playlist. We've got a lot of details on the market structure indicator. I would refer you back to that. But here, this is a decent example. Let's come to this first test of the IB high. Okay, so number one, I can see here when I'm coming. This is the first test of the IB high, so it's 10:30, right? We just looked at this on the candlestick chart. Well, number one, I'm coming into an order block from off to the left. So God, I'm gonna have to go back way. Yeah, so there it is, right? So there's the well, you saw it for, jeez, right? This is the thing with candlesticks, right? You got to scrunch them up here, so we can see the order block here, right? This is the aggression that we're coming back to test now. Now note here, we're testing that. I'm also creating another order block from that level. Let's see if I can do this. Open it back up all the way. Okay, so as I get up here, I am testing a prior order block from the left, right? So that's just, it's nothing more than potential resistance, right? It's always just potential. So as we look at that location, and then you start to see some of the benefit here of why having these on the footprint chart are giving you additional insight. Okay, so I'm tapping into a prior order block, and then I leave behind another order block. Now note as I come out of here, so this is, we talked about this. This is the first test of the IB high. I went 1463 positive delta. Whoa, whoa, whoa. Well, now I can literally see the imbalance from this candle low to this candle high. Right, so look at the middle of there, right? That's a pretty good amount of size for micros to be coming down here that hard. I go 1100, 1400, 1000. Here's a 749. They're trying to kick. Note what happens here. After this push down, these guys kick back. What do? They kick right back into where that stacked imbalance was. Now, what else is here? There's the 21 McGinley, right? So this would be for any of you price action traders. That's a key entry point. Oh, are we going up? Well, look at this big stacked imbalance, or pardon me, this fair value gap here, and I got another one up here. So if I was thinking about selling, I'm more inclined, I'm more comfortable doing it because I can see the imbalances that are here. I'm coming from an order block, and I've had back-to-back fair value gaps. In addition to that, note the red outlines, right? 3 candles in a row. So I've got aggressive selling here. I've got stacked imbalances here. We come back to test it. So that's what I mean by I'm getting insight. It's not so much what's happening at that tick. Oh, it's 146 to 29. That's not what I'm talking about. I'm talking about just spotting that if right, if we went down and then we started to rally, these guys are going to be panic buying because they're on the wrong side. So they're going to have to cover. But if you're wondering here, oh, I'm at a key entry point here. That's yesterday's VWAP. So oh, I'm hitting here right as down we go. Retrace. Now here I've got, again, these are color coded. So if I'm retracing back, so let's think of it this way: we've come down, we're retracing back. I can see this big fair value gap that I've got up here. So I'm a little more comfortable selling here because I know it's going to be more difficult for the, not that it can't, but more difficult for the market to break through that imbalance. Likely, we're going to do that. So as we get up here, now I know, again, because it's color coded, that this is the edge of the last swing that broke structure that left behind a volume profile. So this would be the edge of that volume profile. In this case, it would be, if we were looking at the profile of this swing here, this would be the edge of where we'd find value, right? So all the value, the 68% of the value would be contained in here. This would be the edge of that volume profile. If you're not familiar with that, just go back to our last market structure video here where I demonstrated that and showed you visually. I don't want the actual volume profile on there. I just want to see the edge of it, right? That's why we give you that option. So if I look what it's beautiful, right? I didn't actually plan this, but look how nicely this plays, right? So we come back down here. Now I come right back to it. Right, I know that all the value here, because I had a structure break, all of the value there, all the volume here was here. So I'm on the edge of that. Right, so this is, it's not that, oh, well, of course the market's going to turn there. It's not what we're saying. It's just it's got the potential. Now, even if I'm selling here, note I've got this big fair value gap up here. So again, in a micro, well, that's not so far that I might be, panic buying to cover here. I'd be more comfortable if I start to see some, look, right, 367. Whoa, that's not particularly huge. It was 1161 on the last push into this area. 367. Look at all the absorption. Oh, and what's about the next bar? Next bar. Right, we're starting to head down. Oh, big imbalances, big imbalance. Now look here. This is another good example. What are we doing here? We note here we don't have a zero, so we have unfinished business here. They come down, they finish up, they clean up that auction. We get one little squirt down. This is classic trap traders. So somebody's late to the party here. They're thinking, oh, we're going to keep going. So they're aggressive here. They get a couple of ticks into it and get faced, right? So it comes right back, and they have to cover. So what we can see here is that we've got trapped traders here, right? Now you don't know they're trapped until the price starts to move away from them. Then you can look and identify, oh, these guys, they're screwed. They got to cover. Now, of course, right, micros maybe not, but on a full size, definitely. Well, how many ticks we got there, right? From when they're in trouble to what we got here, that's 31 ticks. Likely not many of you are trading the full size with more than a 32 tick stop, right? So likely if you're trading full size, right, that there's a potential scalp, right? Offside traders. Here we go back. Okay, what are we doing? So what are we really doing here? We're just kind of going sideways, right? Just no particular advantage other than look at the deltas, right? Now look, right? Oh, are we going to push? Oh, here's a down bar, right? So that all that's showing you here, these little dots, right? So that's a down bar with a positive delta. This is an up bar with a negative delta, right? That's what those little dots above the bars are. We have a few other little nuances in there. Again, you can watch the footprint chart to get a deep dive into it, but you don't really need to worry about that so much. What am I looking for? I want to see the imbalances. I want to see where traders are aggressive. Here, now this is a nice example here. Oh, there's that 1323. So here, this candle, do you see the purple in the background? That's creating the order block. Right, now what comes out of that order block? Boy, right, down hard, right? Again, we've looked at this. Here's the first test of the IB low, right? Comes back up. Here's that 123 where we just looked at this over on the candlestick chart. We're coming up to it. Boy, these guys, that was the one, right? These guys were a bit early. Uh-oh. But now look what comes out. Again, right? So here now we just looked at this just purely on the footprint chart, and we also looked at it on the candlestick, right? Remember, there's a 50 and a golden zone right here, and then we also looked at the anchored VWAP was ticking right here. Well, look what comes out of here. So number one, there's an order block based on the candle that comes out of it. So there's the order block that's there. Here's the fair value gap. So if the market is retracing at all, right? So number one, if you took the short here, well, you're more comfortable because if it comes back here, if anything, you'd be looking to add, right, to DCA your price, and because you've got this aggression here, the market is showing me here that I had aggressive selling. Now I can see it in the fair value gap, but I can also see it in the imbalance within that candle and the stacked imbalances. So I know that if this starts to roll, that these guys here are in profit. Come here, right? These guys are in profit. Oh, are they nervous here? Well, we're right on the 21 McGinley or 21 EMA or whatever you prefer. We prefer the McGinley. So we negative. Oh, a little absorption here. Well, there's some positive delta. Right, now note, this is not the first test of the IB low. Remember that the emphasis point here. Now, I should have made a point of that. I do in the name, but let's be clear. It's not every test of the IB. It's only the first test, right? First test, IB high, IB low, right? Always an algo there to fade it, right? Test it yourself. Don't take my word for it. Test it. Do your own testing. You can thank me later. Okay, so I think I got that covered. God, so much for short. Let me come back here one more time over here. Let's see if there's here's that section we were just looking at. All right, so if we start to come back here again, that's the point I'm trying to make. So if you don't prefer, if you don't like or don't own or just have no interest in using a footprint chart, this is about as close as we can get you. Right, so you can see where are those imbalances, where are they aggressive. You combine that with a cum delta. It doesn't have to be our cum delta, but a cum delta. Ours is the one, but the advantage, we're giving you Bollinger Bands around it, right? Which is kind of a nice touch because I can see expand. Look here, right? So we get above the center line, right? Now we're both right. This is often a great reflection of. You can literally just kind of watch what the market's doing here, which is why I keep these on a candle by candle basis. But I pay very close attention to the slope of the center line and where we are in relation to that center line, right? And then of course we look when we get outside of standard deviations, like here, right? 2 standard deviations outside of the norm, a delta, right? Same thing here. Here, right? I don't quite. This is not well, it's not big enough here, but I'm just kind of waffling, but I can see the slope is pointing down. Now all of a sudden, oh, now I got a slope that's pointing up, back down. They're all tools just to help you try and identify those locations. So is there anything else here? Here being a good example, right? So we push down here. Now we come back here. Now I'm back into this order block. Oh, I'm going to retrace here. Now I'm back into a 50 and a golden zone. Oh, leave another order block. Oh, now here, right, it's not 100%. Oh, now if your stop is at the top of that order block, well, you got stopped out. And it broke the 65 here. Wait a minute. Oh, maybe we got a trend change. So that's why here you might be thinking, oh, I'm interested in being a buyer. But if you are interested in being a buyer here, look what you have to get through, right? So that's why you might hesitate here. Wait a minute. Okay, now if I'm on full size, I probably have enough here for there's probably 5, 6, 7, 8 ticks there. I could get a scalp out and maybe a runner flies. But I've got enough room here. Well, what's there? Here, I'm going to wrap up there. What's there to the order block? That's 28 ticks. On a full size, that's enough. Micro, maybe not. But if I break here, when I come back to it, I'm much more interested here. I want to sell when I get back here, just like I wanted to sell when I get back here. Or I would want to sell when I get back here because I know there's supply up there. Like I know that there's demand down here because that is a demand zone from way back 3 days ago, right? And there's a golden zone there. All right, guys, that's probably all I got today. I could go on for another hour if I went through the rest of the day. There's just so many good examples of it, but I don't ever want this to appear as though I'm trying to make it look like it's easy. This is not easy. I would be the first one to tell you this is the single hardest way to make money, bar none. I don't know anything harder. You either love that or you're drawn to it. One or the other, right? You are competing against people with infinitely more money than you will ever have in your lifetime, infinitely more resources, more information. And by the way, you're not competing against them. You're competing against their software. What do we know? It's over 95% of all the trading done in the stock indexes is done by algorithms, by software. That's who you're competing against. You got to know what they do and what they prefer to do, and this is about as close as you're going to get to being fully armed to compete with them. I mean, you know, maybe I'm not being objective there because this is how we have tried to put these tools together to help you compete with them. Right? It's not easy, but if you're disciplined about risk, right? That's always what it comes down to. Most negative performance in the market is because people are taking too much risk and they don't want to get stopped out, so they move their stop, right? We've all done it, and you're like, oh shit, I don't want to get stopped here. I'm going to push that a little bit, right? If you're trading a 2 or a 3 lot in a full size, you're like, god damn it, right? It's right next to that. Oh, I'm going to get on the other side of VWAP. I'm going to push that. Oh, they're not going to get on the other side of VWAP. And all of a sudden, something that would have been maybe a $150, $200 stop turns into a $400, $450 stop. Now you spend the rest of the day trying to recover. It's just again, for someone who's been doing this for a long time, you will have infinitely a better experience if you prove to yourself that you can trade micros profitably and that you have the right amount of capital before you go into the full size, because it's a whole nother ball game. Right, everything's happening much faster, and here even with a 4,500 tick, right? If you're doing that in full size, those are very, very expensive bars, right? Just a suggestion because I want to see you do well. Okay, guys, hope that's helpful to you. Don't forget about the Halloween special. Well, that's in the email here that you all got. Okay, I'm going to wrap it there. You guys have a good one. We'll talk to you next time.